Good morning, everyone. Thank you for that. Thank you for the intro. My name's Alan Hunt. I'm the founder and CEO of NRN. All right, let's see. There we go. Oh, let's go back one. Look, today I'm going to be talking about the future of distributed energy. So I've built a little startup in the last few years trying to change the way that people can access renewable for their property and businesses. But I'm going to start out today's session giving you a bit of 101 of energy overall, and I think I'd explain a bit about where we think it's going to go, and then I'll explain a bit about our business, and we're also doing some fundraising, so I'll chat that at the end of it as well. Bit of 101 on energy. We've got a traditional supply chain of energy. Starts from the generation, transmission, distribution, and retail and household. A lot of people, I guess, look at the energy bill every year. $4,000, $5,000 our bills are getting up to it for a household, and nearly 50% of that is paying just to move energy from 300 kilometers away to your household. Bit of a split there on what that breakdown looks like, but the big main cost is really a distribution and transmission charges. We have solutions. We all know this, rooftop solar. It's been great. It's great to see Australia's adoption of rooftop. We've got 3.4 million homes now in Australia that have solar on their home today, which is great. But there's 24 gigawatts of unmanaged electricity just going to the grid whenever someone isn't using that power on their household. The solution is batteries, but less than 1.5% of homes who have solar today have a battery. So we've got a big challenge, I think, in front of us around how we help consumers make this transition to full distributed energy, where we can not only harness the power, store it, and then manage it to support our grid. Talk about some of the challenges that we're facing in our electricity market. This is the big infamous duck curve. For those who are not familiar with it, I'll explain very quickly. This profile is a demand shape from midnight to midnight. Generally, when you use a bit of power in the morning before you go to work, you'll leave your home. We come back at 6 o'clock, you've got a big spike of power, and then it goes down at night. The duck curve is there because there is so much power of rooftop solar being exported during the daytime. The demand profile in the grid is becoming impacted every year. We're getting to the point now in South Australia in particular where we have negative market prices during the daytime because the supply-demand is really unmatched, and it's causing other ramifications in our market. I guess in Australia right now we have the biggest duck curve globally, but also we have now moved to a 5-minute energy market. So this means that the trading of power needs to be very quick to make sure that we have the right balances in our grid, and this is also one of the big reasons why your energy cost has gone through the roof over the last few years. I want to talk about the opportunity that lays ahead of us in the distributed energy space. AEMO is our Australian energy market operator, has finalised their integrated system plan, the IESP, and they forecast by 2050 we're expected to see 72 gigawatt of rooftop solar installed. That's 4 times more solar on people's homes than we have today. They're also expected to see 16 gigawatt of batteries being installed by 2050. So I think it's great to say these big plans, but there's a cost to it. And in today's world, we expect customers, us, everyone here in the room, to put our own savings, our own money to go and buy this infrastructure for the future. And it's expecting to cost $142 billion between now and 2050 to get to that point. So I guess the angle that we're taking at NRN is we don't expect customers to buy this infrastructure. We should be buying it from our energy, I guess, as an energy industry, and help them through that transition. So, quick introduction to us and what we're doing. So we are, I guess, our aim is to build the world's biggest renewable network, and we're changing homes. We're changing the way that homes will upgrade to solar and battery in the future, and not just homes, also businesses who can also join. Some of our team members here. There are 3 main stakeholders that we work with. Energy retailers, the utilities. They are suffering with rising costs. They're suffering with grid challenges because of volatility. And also there's concerns about their profitability. I think most of the big 3 stated a lot of big losses in the last few years. And really when we start looking at customers buying these DER, with distributed energy resources for their property, energy retailers don't really have a role in the future. So I think it's quite a concern for them of how they can make money in the future. Consumers, we're all going through it. You saw your bill increase by at least 30% over the last 24 months. Get used to it. It's going to keep going up because of the challenges we're facing in the grid. There's certainly an affordability barrier, so those who can afford to have access to cheaper bills, i.e. buy solar and battery for the home, can access cheaper electricity, but unfortunately there's still 65% of the population that can't afford it, and those are the ones that are going through the challenges. And then there's finance challenges. There's products in market, buy now, pay later, there's finance options, no interest, but the reality is the principal and interest cost of those solutions is pulling the customer in a negative cash flow position, and it's pulling the customer away from helping this transition to renewable. And then lastly, the other stakeholder we work with is solar retailers. So it's a really intense competition. There's 4,500 solar retailers in the country. It's always around who's got the cheapest quote, and it's a transactional nature. And we're seeing a lot of these companies go out of the market at the moment because there is actually a big drop in the solar retail space. So I'll talk to you about NRN and what we've done to try and, I guess, solve this in our approach. We've got a collaborative business model, so we call this our platform. I'll start off with our partner energy retailers. So they go and build energy plans that include solar and battery as part of your plan, and it allows customers just to have access to cheaper and greener power. We really challenge the fact, do you need to own that system on your house? I didn't have to own the power station to have power to for my property, so why do I need to own the solar and battery on my property? We work with infrastructure investors to get a yield from distributed energy resources. This is, I guess, there's an attractive return for them in comparison to large-scale utilities such as solar farms and wind farms. Solar retailers, they're the workforce on the ground. They sell this solution to market, they install it, and they maintain the solution, giving them an ongoing recurring revenue. And then finally, our customers, so all of us in the room, we can now have solar and battery on our home at absolutely no cost, stress-free, and we save money from the first day. So let me talk to you a bit about the impact that we've created by building this platform. The impact. Start with the energy retailers. So the retailers are selling energy directly from your house to that customer instead of spending all that money on transporting it 300 kilometers away. It's not rocket science. They are able to manage these assets into one large virtual system. We call it a virtual power plant, and they're able to trade simultaneously in the market to protect their hedge position. We're also seeing an increase through energy retailers retailing distributed energy rather than just traditional energy from the grid. Consumers are saving money without spending anything. They have access to cheaper and cleaner power. There's no inequalities here. If you're rental, you're social home, you're your own homeowner, you all have access to it. It's risk-free and there's no stress for consumers. Lastly, solar retailers, there's no pressure on, I guess, who's got the cheapest price because there's no price to the consumer. They increase conversion rates, they're selling more, and they have a long-term relationship with that customer because they actually carry a maintenance contract to make sure those assets are working on those consumers' homes. Let's talk about some numbers. So, what is the impact that we've been able to create through our portfolio so far? So, our average customers are saving $839 per year, and they spend absolutely nothing, and they have a solar and battery system on their home. Great. Second aspect, we have nearly 5x an energy retailer's margin in comparison to you going and buy your own system independently. So when you go and buy your own solar and battery system, you're avoiding 70% of their revenue, your margin, at the end of it. We've been able to obviously increase that because they can monetize from the solar and battery that's installed. We've got 5 partners right now, and we've got about 11 in the pipeline that we're working with. Infrastructure investors. So we've increased, I guess, the benchmark of large-scale utility solar and wind. It's a 30% up if they were to invest in distributed energy resources such as solar and battery. So that's been pretty successful. And then lastly, solar retailer. They make 2 times more profit by selling this solution than they do selling solar traditionally. So really, for us, our business model was making sure that all of these stakeholders win, and we get to the results of growth. Some of you maybe are thinking, well, how do we make money? So how we make money, we take a clip of all of the stakeholders. We have a deployment revenues. Every home that gets installed, we get revenue. We've got an annualized revenue of about $3,000 for our assets. Imagine it's like a toll revenue. It's just a fixed fee that we get. It's a very long-term contract. We have a 10 plus 10 year infrastructure contract that's in place, and there's very low churn. Overall, a one home contract value is about $60,000 worth for us. The EBIT is about 48% over the contract, and then when we take interest out at a very conservative cost of capital, we're still at the 25% margin. So there's 5 of us in this wheelhouse, and we all have to benefit to make sure it's profitable. So I'll give you some examples. Here's 2 residential examples. Large home at the top. This customer's been with us for 2 years now, I think, saving $1,800 a year on their electricity bill. They spent absolutely nothing. They could certainly afford to go and buy a solar and battery system. It would cost them about $28,000, this kind of system, but why would you go and spend $28,000 when you can have it at no cost, save $1,800 and put your $28,000 to work somewhere else? And then on the below one, just I guess a small family, saving $624 off the electricity bill, and this is through our energy retailer partner, Diamond Energy. We have some traction, which is cool. Being a startup, it's always around building it out, try, test, learn, and really we came into this year in January and it was go. Let's grow. So we've grown. It's been really cool. We've got 246 sites deployed, just over 2 megawatt now of distributed energy, just over $4 million worth under management, with an ARR of 620,000 and a contract value of 15 mil. So as you can see, assets under management is growing, but really it's the sales and the growth that we're starting to see, and we're experiencing this excited curve that every founder in any business always dreams of. So it's great to see it's all coming together and excelling. As I said, we're doing fundraising, so I'll pitch this on the end, and it will go into the next sessions. We're actually through the process of doing a convertible note as we speak. So we closed a debt facility in December last year, $10 million. That will get us to October this year. We then secured our first VC, Investable, a few months in February this year with our pre-Series A1, we called it. And now we're doing a pre-Series A2, which will get us to our Series A in March next year. So we're doing a minimum of $2 million convertible note, very vanilla, nice and easy, and we're hoping to close that imminently. Let's see how we go. And then also we're in the process of securing the second round of debt facility, minimum of 30 million going up to 50 million, which should be deployed. We've got line of sight within 9 to 12 months to be able to deploy that capital. The little dotted line is what we want to be doing. Obviously, we have grown, but the next phase is really heavy growth for us. So yeah, I'm actually a little bit under time today. I spoke too quickly. But look, that's our view on distributed energy in the future and what we want to create. And we are aiming by 2040 to help 2 million homes with distributed energy connected globally through us. I want to thank you very much for your time.